Anandi Softwares welcome you to the presentation of IFPRSV Plus series Project Finance Software Packages. We thank you for your precious time you spared for this presentation. At the outset and before start, we state and also request you to visit our website as A. AnandiSoftwares.in, B. ProjectFinanceSoftware.in, C. CMADataSoftware.in as for more info and textual detailing. With this brief, we proceed to presentation of software. This desktop folder IFPRSV12 includes the following shortcuts. IFPRSV Plus is the main parent package of the series, wherein all data input for the various project parameters are being asked into. All financial reports with detailed ratio analysis, supporting reports are very immediately processed and presented practically in no time. It is here only where financial interpretation and decision thereto is carried out, along with a detailed and extensive ratio analysis. Working capital assessment is rather a big strength of these packages, and you are deciding your CMA here itself. Your data input and financial interpretation is restricted only to this main parent package. This CMSV Plus package picks up all the relevant data from the main package, and CMA is getting prepared all on its own with no data input therefore. Same way, ExportSheet is placing and auto-converting all your project financial reports and CMA reports into Excel sheet all on its own, and no data input is required for the same. Graph Plus will get auto-presented your financial and ratios in nice and decent graphical press structure all on its own. It has multiple and many choices among various financial items and ratios to be selected upon for graphical presentation. Here you will find that your data input and financial interpretation is just restricted to the main parent package in the series. This is the first presentation screen of IFPRSV Plus. It has a very simple and effective file functions for various project file handling. There are no restrictions and you may work for any number of projects. From among the various files, select a particular file to work upon. Now we are selecting a project file Demo 12A for a further and detailed look into. As we get in, it is fully symbolic software, making the operations very fast and easy. Last line of symbol is meant for input of actual of last 3 years. Second line is related to various cost parameters. And the first line of symbol is for various project parameters like cost of project, means of finance, capacity determination, income elements, working capital assessment, and other important project parameters like BEP, IRR, sensitivity, etc. You may generate all reports from here at any point of time, and all the reports will be regenerated, updated, and ready in less than 2 seconds. A blue line will flow through, generating and updating all reports. Coming over to the first input as of general parameters. Enter the name of the company unit, its location, and password if you intend to protect and restrict this particular working to yourself only. State its constitution, and all tax aspects will be accordingly worked for, picking up its respective slab rates, rate structure, and other deductions. State its category as existing or proposed. Give which type of unit you are working for, either a manufacturing unit or industrial unit. It covers all type of manufacturing unit including extrusion manufacturing. Non-industry type as trading service category unit as hotel, hospital, IT, service, trading, etc. Select denomination as lakh, million, crore, thousands, etc. and a decimal place is there too as 2, 1 or none. Very importantly, you are free to switch over the denomination at any point of time, and all input and output will get auto-adapted and adjusted to this revised denomination without any interaction from your side. Here, you may as well convert all your reports into some another currency, giving the conversion rate. For an existing unit, you may opt to place in actuals of last 3 years, and here projection is up to 10 years. Thus, package provides for 3 plus 10 year workings as actual up to 3 years and projection up to 10 years. You may opt any combination thereto as 0 plus 6, 3 plus 8, 2 plus 5, etc. Give the year header as financial year, calendar year, Samvat year, or just as serial number 1, 2, 3, 4. Very importantly, you could have observed various context notes there too. It is on screen context notes and tutorials there and there itself at its respective input place makes the software as very much fully operational software with much ease and understandability and as a service-free software. Getting then to the cost of project and means of finance. First, we have a look to the means of finance. There are different borrowing categories as term loan, equity loan, debenture bond, unsecured loans and deposits. Firstly, we are referring to term loan. This selection bar opens to a subscreen wherein you can state all your term loan one after the another as separately for existing and proposed. Very importantly, there are no volume restriction or constraints and you could specify any number of term loans. Let's add one more term loan with this plus button. Say TL4 of 100 lakhs, TL5 of rupees 50 lakhs, and then you could state differing and divergent terms of finance as for each of the term loan separately. Then the next item is that of equated installment loans, wherein same way like term loan, you may specify either any number of equated loans. Say you may come across an existing balance sheet with 10-15 different equated loans from NBFC, or you are intending to avail different equated loans as proposed. The same way it is true for debenture and bonds, stating different conversion clauses, redemption premium, etc. As for unsecured loan and deposits, you may categorize as separately from promoters, friend, relatives, ICD from company 1, company 2, etc. with differing terms of finance for each. Now we move to the detailing for the related financial terms under cost parameters. By the side panel refers to the various categories of borrowings. Now getting over to the interest and repayment of various term loans, all your defined term loan will be shown separately as under existing page and proposed page. To state terms, select the term loan from the drop down box. We pick up the newly defined TL4 and then TL5. State the basis of interest calculation as quarterly, half yearly, monthly or yearly. Rate of interest, say 9% as general and 0% as initial under two-tier interest arrangement. For example, now we are sitting in the month of September. We want general interest to be applied as from year 1 and month 5. Thereafter, as for this new term loan 4, state the repayment in just simpler terms. State repayment years and then repayment as quarterly, half yearly, monthly or yearly. State the moratorium period. Say we want 6 months moratorium, then repayment to start from year 1 and month 7. Instead, we need complete 1 year moratorium, then repayment to start from year 2 and month 1. It is just very simply setting the points only, and entire input is just related only to the very basic raw data only. Say for any reason for this new TL4, giving even repayment does not suit you, then choose specified repayments where you could give any even, uneven, erratic, bullet repayment by the way you want it. Say bullet repayment of 50 lakhs at the end of first year, 30 lakhs at the end of second year and completing it. You had a facility of giving any repayment structure as each month wise over the period of 10 years. Thus, you could see that how simpler but how precise and exact with lot of flexibility you could state interest and repayment for all and each defined term loan. The same way, The complex and tricky issue of equated loan is handled in a much simpler and easier manner for each type of equated loan. As from drop-down box, we select this equated loan. Most of the equated loans are monthly structured, but even it could be bi-monthly, quarterly, half-yearly or yearly structured. Furthermore, you could accommodate varying and multiple installment structure. For example, instead of 18,000 for 5 years, it may be as 18,000 for first year, 3 years, and then increasing to 19,000 for the next 6 months, and then reducing to 17,000 for last 1.5 years. Then you could state starting point, say setting in September starting point as 5th month, moratorium period, pre-EMI interest working, etc. As in company case, if so, you may calculate interest and repayment on debenture and bonds with differing conversion clauses with differing redemption premium as separately for each series. Here, you could state differing terms for each of the unsecured loan defined as say separately for promoters, friends, relatives, ICD from company 1, company 2, etc. You could detail out here charges for assets under financial lease arrangement, and at this place your various and miscellaneous financial charges as bank charges, bank commission, etc. Coming back again to means of finance, now we have a look to the equity and capital portion. Here, the nomenclature will get varied as per the constitution. You could give here the detailing of the stake and holding status as among different promoters group or partners, vis-a-vis giving complete clarity on it. Furthermore, it becomes a part and embodied in the means of finance, giving a total view on it. Importantly, you could find here that there are many other user-defined items are being given for reserve and surpluses, and as well for other non-current liabilities. This facilitates a lot in adapting and adjusting varied and different nature of other items of balance sheet. Finally, it could be found and realized that how and with which precision and exactitude and with no volume restrictions or constraints you could decide in a very flexi way on means of finance. We may now look over to the cost of project. There are various screens as related to it. This is the first input screen as that of cost of project. Practically it includes varied and more than sufficient individual item of cost of project as fixed assets, intangible assets, varied investment categories, and varied other non-current assets categories. Every item is user defined and you may adapt and adjust it the way you want it. For example, working for hotel project, hospital project, or specifying main machineries, etc. Say writing something here as kitchen equipment for hotel project, OT equipment for hospital project, etc. All default nomenclature are as for industrial project. At this place, you could work out in detail your P&P expenses very effectively under so many user-defined, varied and various aids. It also provides for a detailed working of IDC as well under varied and different dispersal clauses. This screen facilitates you to calculate provision for contingencies precisely. You could segregate your cost as firm and non-firm and then calculate contingency as desired upon. Under the menu options, this screen is related to funding status for cost of project. Specify each item is how funded by way of term loan, subsidy, etc. Say term loan had 75% assets coverage for main machineries, 60% for tool and equipment, and 50% for molds and dies, etc. It ensures that your term loan amount is not exceeding the each individual assets coverage. If your project is half the commissioning, then here you could break up your cost of project as already incurred and to be incurred and means of finance as already raised and yet to be raised, giving complete clarity on the stage of progress and financials. Depreciation charges as related to cost of project. There are 16 user-defined depreciable categories as against normal usual need of 5-6 such categories. As related to method of depreciation, it is not overall, but you could be selective of method for each category separately. Say SLM for this category and WDV for next 3 categories and then again SLM. You could place your own rate of depreciation for each category. Importantly, you could specify part consideration of depreciation over next 5 years for any of the category. Say 3 months depreciation on addition to machineries in 3rd year and so on. Thus, a very simple and all accommodative input with varying nomenclature, differing method, differing rate and differing part year consideration. The same way, you could separately specify depreciation for IT purpose in this screen under tax on profits. After having a look to time period cost, we may look over to all revenue items, income element and cost element, and capacity determination. It is this screen where capacity is defined. There are different bases for it. Say you are working for a simple, small, easy report and you intend to finish it off very fast, you may entirely put aside the detailing of capacity, products and instead complete your report just in rupee terms, stating all income element and cost element as percentage to sale value, percentage to raw material cost, percentage increase over specified amount, or straight inserting of the amount. However, it is a need and essential to work out in detail, then opt for the product specific basis. Here, through this traverse function, you could work out for any number of products without any volume restriction or constraints, say 5 products, 10 products, or it may be quite large as 90, 100 or any number. We have added a product with this plus button and given details of that product as name of product say as P4, its unit of measurement kgs, its annual capacity as 2,40,000, efficiency level, attainable capacity and capacity utilization as expected year to year, product to product, say 55, 60, 65 and so on. It may so happen that this new product P4 is a new expanded product operational only for last 3 months, then it could be so stated for each of the products separately. With this traverse function, you could move around all your products as product 1, product 2, etc. Whatever may be your input, it is just handled in this single screen. This is 2. Capacity determination on the basis of input raw material. What we had all stated and seen above is related to where capacity is determined on the basis of final output products. But say when you come across a status where capacity is not determined on the basis of final output products, but capacity is determined on the basis of input raw material, then this second option need to be used. This could be helpful in all type of extrusion manufacturing like dairy, oil, metal, mining, etc. For example, we take a case of dairy where capacity is determined on the basis of milk input, say 2 lakh liters or so, and it is resulting in so many number of final products from single raw material as pasteurized milk, butter, ghee, cheese, dahi, ice cream, etc. and all with different proportion, different unit of measurement, different conversion factor and different sale price. Thus, you could find that how direct and straight suitability is provided for all categories and types of project working, be it a very simple, small, easy type or
a detailed, difficult, complex or intricate nature, and all that is handled in a quite simplified and easy manner.
Now we will have a look to all income elements and all cost elements. We would like to make a mention here that it is always preferable and advisable to put in the actual of last 3 years, and once you put in the actual of last 3 years, it will provide you very sure clue and guide as to its trend, pattern and behavior as evidenced during the last 3 years. As for all income elements, all cost elements, current assets and current liabilities. Initially getting into for input of main material, raw material cost. We will take a reference to the status of previous years. We could find here that it is ranging as somewhere 68% to net sale value of output, amount of raw material cost incurred, percentage increase year to year, etc. You are provided in the side panel multiple and varied options for its calculation. We opt option as percentage to net sale value of output and place it as 68% or so, and further we could differ it year wise as well. Say 68% for next 2 years, 68.25% for then next 2 years, and so on. If it is so, you may opt for quite detailed and exhaustive workings under the first option. You will find all your defined products in the side list. Say we want to enter all the raw material ingredients for the newly added product P4. With these traverse functions, you could add any number of raw material ingredients for each of the product shown in the side list of products. Say P4 is carrying 5 ingredients, whereas product 1 is made up of 20 ingredients, and that product 2 is composed from 10 raw materials, and so on. For example, we have added a raw material for P4 with plus button stating the name of raw material as R1 P4 as raw material 1 of product 4, quantity required for above batch size of production, say 5 kgs. You could specify losses, gains as percentage at each of the raw material level and as well as at the product level, or as a combination of both, ensuring precision at each of the ingredient level. Then specify rate per unit as of imported raw material, indigenous raw material, even as differing rate for each of the year, or as stating percentage increase, say 2% increase every year. You are enabled to change the proportion between imported raw material and indigenous raw material as year wise for each of the raw materials separately. Thus, you could observe that how precise and exact you could be in project working with no compromise anywhere. This software actually could very well work as a project viability finder. Instead, you may opt for second option, wherein you may specify given cost per unit for each of the products separately. Say 150 for product 1 whose sale price is 220, 200 for product 2 having a sale price tag of 300, and so on. Importantly, throughout the package, among the various options, nowhere that data is erased or lost. It is just simply put to use and non-use. For example, you had put up a voluminous data at first option, but due to lack of some information on some other product, it could not be completed. Then in such a case, you may switch over to other option and soon finish up your report. Later on, when further details are available, you could again switch back to the first option and complete your detailed report. Nowhere data is erased. It will just put to use and non-use as you switch over options. Furthermore, you need not to save your data anytime. It is as auto-save at all time. At the third option, as seen, it could be as overall percentage to net sale value of output, or you could be even selective for each of the product wise. For example, product 1 is a manufactured product, stating raw material cost as 70%. New product P4 is a traded product where you want to specify main material cost as 92% or so, as the case may be product to product. As under the last option, nothing doing, very simply just straightway enter the figures of main material, raw material cost and finish off. Calculating other material, packing material cost. Now we have a look to other cost element, say other material or packing material. All income elements and cost elements add by the side panel of each. It provides for multiple and varied basis of calculations. The options vary right from very precise, exact and detailed working to a fair, approximate and easier basis of working. Initially, we shall get a reference to the status of previous year. Here we find that it is varying somewhere about 3% to the main material cost, 2.25% to net sale value of output, 16% has increased over last year, and so on. Getting a clue and guide here from, we just opt the relative option, finish input and soon exit the screen. The input by that way is very fast and quick. As referring here to the third option, it may be as percentage to net sale value of output as overall for all the products together, or you may be selective for each product wise separately. Say from among the 4 products, P4 is a full truckload supply and there is no need of assigning any packing material cost to it. Then just keep this product P4. Same way, it could be stated at option 4 in reference to main material, raw material cost. At option 5, you may state the last year amount or some reference amount and then state the increase to be considered as for each year. At last, 6th option, without getting into any calculation, just insert straight the figures there too. Now coming over to second option, it can be specified as given specified cost per unit for each of the products separately. Whereas option 1 is meant for detailed calculation. Say, for example, you are working for some pharma industry and where packing material cost is of prime importance and ranging somewhere 25% and 30% of sale value. Then you may opt this first option and give the detailing of each of the packing material for all the products separately. Say as bottle, label, cap, strip, tin, box, etc. Thus, we could conclude here that as from among the various options, you may opt and select a particular option depending upon A. Nature of project, B. Size of a project, C. Importance of a particular project working, D. Importance of an element within that project, E. Data is available for a particular working, F. Urgency of making a report and its submission, etc. Next cost element is employees cost and expenses. First option is meant for detailed workings. You may categorize your employees cost and expenses under 3 user-defined heads and may be adapted as per need. Say as teaching staff and non-teaching staff for an educational institute. Same way may be adapted for hotel, hospital or any other type of project. The default industrial nomenclature as factory personnel, administrative personnel and selling personnel. Under each of the said 3 heads, state the description for each of the placement designation category, skilled, unskilled category, number of persons, pay per month, starting year and starting month, etc. There are no volume restrictions or constraints, and you are unable to give all and each job position with its detailing as said. State also the increment and staff welfare expenses as percentage to yearly emoluments. You could as well use the other easier bases available as given in the side selection panel, as year-wise varying percentage to sale value of output, and along with year-specific amount of expenses may also be given. It may be also as a percentage increase over a given amount at the third option. Additionally, employees' cost can also be considered on a job rate, piece rate basis. Say, for example, your P4 product is a textile sari product and where some outside embroidery work is carried out at ₹5 per unit. Thus, crystal clear working for each element. Same way, you get a quite extended choice for every and all other cost element as fuel cost, power charges, repairs and maintenance, other operating expenses, general and administrative expenses, selling and distribution expenses, etc. could also be worked out very conveniently and very effectively. You are as well facilitated for a detailed working of gross sale, net sales, domestic sales, export sales for each of the product defined, and further easier and simpler bases and options there too. Varied bases and options to calculate for other operating income 1 and 2, miscellaneous income 1 and 2. Thus, you could find here that there is a lot of flexibility, multiple and varied bases and options to calculate each income element and cost element, enabling you to keep a complete track and control over the activity level each year wise and for each of the element. Now we switch over to the working capital assessment. Working capital is rather a big strength of these packages. Looking to the side selection panel and enter the relevant details. Initially, we shall have a look to the status of previous year. It is a very helpful and greatly assisting feature. Here, we are made known of the holding structure for all categories of current assets as evidenced during the last 3 years. We could see that WIP is in the range of 10 days, finished goods at 0.40 months, domestic receivables in the range of 3 months. Same way, look to the holding of raw material, advance to suppliers, etc. Taking a clue and guide here from, very simple, just enter the holding structure as required for all these as raw material imported, indigenous, WIP, finished goods, domestic receivables, export receivables, advance to suppliers, etc. Very importantly, you could specify stocking and term credit period as separately for first year, second year, and third year onwards, bringing in lot of flexibility and adaptability for the very precise and detailed assessment of working capital. It also provides generously for other specified user-defined miscellaneous current assets and miscellaneous current liabilities under lot many 8 different heads. As for current liabilities as well, take a clue on its previous behavior and then give the relevant data input as to various creditors level as separately for first year, second year, and third year onwards. Further, as current liability, you may have taxation and dividend with paid or payable status or any combination there too. At third screen, state and decide on DP percentages as separately for each category of current assets. Say you are having government receivables and want DP at 75% instead of 60%, export receivables at 90%, and so on. Then, by the right side, your request for bank finance may be rounded to a certain amount, say 200 lakhs or so, as separately for each year. Now, we shall have a look to the output reports. Generate report will make the blue line through generating all financial reports and supporting reports practically in no time. As among various financial reports, first is cost of project and means of finance, profitability and net cash accruals, 2 reports on working capital assessment, cash flow statement, 2 reports on balance sheet as summarized balance sheet and detailed balance sheet. Going to profitability, you could see the entire profitability statement as up to net cash accruals, as along with actuals moving into the projections. Two working capital assessment reports. Your entire working capital decision rests in this one page itself, and CMA report will get prepared all on its own with no data input, fetching all data from here. You could see complete detailing on current assets with its holding structure over the past 3 years and as how it moves into the projections, item to item, as up to gross working capital. Same way, the current liability is worked out, getting installment due within next 12 months here for all and any number of term loans defined. The third part is a deciding part on working capital with all relevant info as NWC, MPBF method 1, method 2, DP status for each type of current assets, past and future, margin money, current ratio as including installment, excluding installments, etc. Get decided onto working capital with lot of flexibility as to activity level and working capital assessment, and your CMA data will get framed all on its own. This is a detailed cash flow statement. Then follows detailed and summarized balance sheet. Then follows these 8 pages complete statement as related to financial ratios and its analysis along with project at a glance. This is full page analysis of profitability as to its profit structure, cost composition, etc. One full page detailed analysis of working capital giving all through structure in terms of days and months, all methods permissible bank finance, and many other important and relevant working capital analysis. This is related to DSCR and leverage, item-wise funds available to service debt and debt service obligations, then DSCR in both way, gross DSCR and net DSCR. It lets you know the individual DSCR of the year, cumulative DSCR, that how it moves ahead year to year, and then overall DSCR. This year-to-year cumulative DSCR would be an important guiding factor and helpful in its improving, adjusting, and having an analytical look to the same. Here in the lower part, you are made known of leverage as debt equity, dual TNW as non-quasi, quasi, adjusted, etc. as that of actuals of last 3 years and as it moves ahead in the projections. You get interest coverage ratio in all 3 ways. Then P&L as related to balance sheet in terms of assets turnover, ROE, RONW, etc. We go back to BEP. BEP could be in reference to production or in reference to sales. You could decide on to variability structure for each element and whether miscellaneous income is to be considered in BEP working or not. You are getting a full-fledged and detailed BEP report stating BEP and cash BEP as percentage to install capacity and also year-wise status of BEP and margin of safety. As related to IRR input, it is to be worked out till repayment continues or as for the specified years, whether to add back interest charges or not, etc. Very importantly, you are facilitated to consider the residual value of each asset separately, including goodwill, brand, patent, trademark, copyright, etc. And you are very effectively enabled to get the proper and effective IRR reflecting the correct picture there too, either as a project IRR or equity IRR. Looking to the sensitivity analysis, 4 pages detailed sensitivity analysis with user-defined 4% value as positive and negative sensitivity. It is just not restricted to net sales and PBT, but very much extended sensitivity analysis as related to the resultant PAT, resultant DSCR, BEP, ROE, RONW, etc. You could observe that with 2% increase in sale price, its resultant DSCR stand at 2.66, and with decrease it works out to 2.11 as against the gross DSCR of 2.33. These are all supporting reports, including detailed quantitative workings and all reports on income elements and cost elements. Every figure will be fully explained in supporting reports, that how it is arrived at, through which math function as plus, minus, multiple or divide. View, edit, print reports. You just sit back and get all 35-36 reports print at a single click, and all adjustment as to font and format will be carried out by the package depending upon the number of working years. Annexure numbering. At annexure renumbering, you may anytime renumber your annexures as required. After having a detailed overview and presentation of this main parent package, we move to the other three add-on packages. At CMSV Plus, you get the CMA data linked and it gets ready instantly without any data input. We select one file and get into it. We opt yes to interlink. You could find that all data are being fetched here and placed as for the number of year workings opted for. Generate reports and all CMA reports gets ready. These are all CMA reports, Form 2 operating statement, Form 3 analysis of balance sheet, and all other CMA reports. Additionally, it gives you the financial highlight reports in a summarized manner, and a detailed 3-page appraisal and financial analysis report as separately for profitability, working capital, and balance sheet. ExportSheet. At this add-on ExportSheet, there is an auto conversion of all project finance reports and CMA data reports into Excel sheet, all on its own with no data input. All your project finance files will get presented here and CMA data here. And as among from the various files, we select a particular file to convert. The conversion process starts then, and then it will convert as separately all financial reports and all supporting reports. It will be in a nice, light and decent color combination. We have a look to few financial reports one by one. And thereafter supporting reports. The same way we see the auto converted CMA data reports. It is prepared as per the number of years being worked out. At this add-on, Add Graph Plus, you will find and get auto-converted your financials and ratios in the graphical structure in a nice and decent manner. You first select the particular report from among the various reports. You may get graphs in rupee terms or in percentage terms, in index terms, or as non-year pie charting. You find so many items to select from as that of P&L, working capital and balance sheet. There are 72 items presented and further item as user defined items. You may have multiple selection of item together, for example, gross profit, PBT, PAT, cash accruals and net sales together, that is 5 items graph. Getting upon the basic presentation, you could immediately switch over and jump to MS Graph with a double click on the picture. Then you could have your own presentation criteria as setting to smaller font size of A, data labels, data chart, type of chart, etc. presentation, you could find that these 4 packages make up the Project Finance software series, where data input and interpretation is just restricted to the main package, and there is a complete auto working at 3 add-on packages, fetching all required data from the main parent package. Concluding, we hope you would have enjoyed the presentation. We at Anandi Softwares assure you of the 100% success run of the software at your end, and our service is not just restricted to technical aspects, but as well even extended to all subject aspects as related to software. For any further clarification, explanation, service or support, you may call or WhatsApp us, email us at any time. You may also visit our website as A. AnandiSoftwares.in, B. ProjectFinanceSoftware.in, C. CMADataSoftware.in. We sincerely convey our thanks and regards to yourself and your team.